All right, let's get into it. So, right off the bat, we have about a minute, 2 minutes to go until the close gets printed. But either way, today was a very fantastic day in understanding how to actually apply a trade plan based on every single thing that we talk about in the analysis. As you guys know, with me, there's zero hindsight in my trading. Everything is pre planned in the pre market. What I do is I separate my analysis into two categories. We have internal context, which is the battle of buyers versus sellers from a structural perspective on the charts. And then we have external context, which is things like the government shutdown, economic reports, FOMC, etc., etc. And for today, we had a fantastic analysis. We had a fantastic trade plan, and everybody should be happy. If you wanted a short hedge, you got it. If you wanted a false breakdown, you got it. If you wanted to just buy a level today, if you wanted to buy support via a pullback, you got it. Every single person should be satisfied with today's price action, regardless of the chop that we got around lunchtime into the afternoon, because I'm going to show you how you can position yourself to take advantage of the trapped traders. Remember, if you are somebody that wants to be profitable in trading, and I'm sure every single person tuning into this video wants to be a profitable trader, you have to understand the number one premise in every single trade that you take. The number one premise is that if you want to make money in the stock market, you have to take somebody else's. Money doesn't come out of thin air. Money doesn't fall from the sky. Somebody has to put in their cash and you have to take their cash. That's why we trade against the trapped traders. So how do you identify who's trapped and who's in control? That's purely based on the market structures dictating who is trapped and who is in control. I firstly want to bring up the Discord. I want to showcase everything that we did in the Discord today, and we're going to talk about the Substack as well. But firstly, let's go ahead and drag over the Discord. This is my live commentary that I'm doing in my Discord via the SPY VIP beautiful members. My live commentary stems from the trade plan and my notes that I do in the pre-market. So everything that I'm talking about in real time with this commentary is zero hindsight. I'm simply having commentary. I'm simply portraying commentary purely based on what I talked about in the pre-market. Everything else is noise to me, right? So very first of all, we had 6650 through 6772 activates. And this was the very first support zone that we were interested in. So let's go ahead and jump into the notes now. I see a few people stepping in, and I'm very excited to talk about today's session. Today's session is going to be one of those videos where you want to watch multiple times. So let's start off with the pre-market game plan. Let's talk about the Discord. We'll talk about execution, and then we'll talk about some extra stuff. So very first, let's go into the pre-market notes. This is our ES guide. This is where our analysis is, and this is where our trade plan is. This is sent out to the SPY VIPs every morning, but I'm now going to make all of my notes free for everybody via Substack. But this commentary, all of this real-time execution is going to remain exclusive for my premium members in the SPY VIP, just so everybody is on the same page on what's going on with the Discord and Substack. So Substack is completely free, but the commentary is premium. So let's go back to the notes and discuss. Today is all about 6,800, the previous all-time high. Yesterday, price ended up printing a massive move from the bottom of the bull box into all-time high, in which bulls are attempting a breakout. Will all-time high be faded again, or will we develop a new breakout structure? Super key context in order to understand who's trapped and who's in control. So if you want to be a good trader, you have to not analyze the stock market from an economic perspective. I know that sounds very weird, but trust me when I say the numbers that were released for data, the numbers that are released for FOMC interest rate cuts, sure, they have an impact, but it's the behavior of the market participants that's going to give you the most elite entry and exits on the charts. Why? Because emotion is money, and money is what we want to make in the stock market. Let's go back to the notes now. So for structure, the bottom of the bull box is 67.4150 through 67.54. On Tuesday, price printed a false breakdown of 67.54 off of a pullback back into it from 6,800 all-time high. This false breakdown resulted in bulls taking the same stairs back up above 6,800 yesterday. Although all night today, price has just been hovering at 6,800. If sellers manage to get price back below 6,800, then confirm a larger false breakout, we can have some interesting price action on our hands. Vice versa, bullish time frame alignments above the overnight high. So here's the bull case. For buyers today, defending above 6,800 will showcase absolute strength and will likely print bullish time frame alignments, printing new all-time highs and a new all-time high breakout structure. Price holding below 6,800 is an early warning sign of trapped buyers, which can get more confirmed on the failure of 67.8750. Bulls would love to hold 67.8750 and quickly recover 6,800 in order to print new all-time highs on bullish timeframe alignments. So if 67.8750 fails, then we don't expect new all-time highs today. Below 67.8750, bulls can be in danger and must defend 67.6450 through 67.72, yesterday's low via a false breakdown. Liquidation back into the bottom of the bull box below, in which we must see a repeat of Tuesday. Massive liquidation below 67.4150. For sellers today, the only way for them to survive and create volatility is through repeating what they did on Tuesday. They must break down below 68.07 through they must defend below 68.07 and 68.12 and break down the supports listed above, especially the prior day's low, which can confirm a false breakout. And as always, view the watch list for an idea on how weak or how strong the market is. So these notes, at the end of the day, these notes that I make in the pre-market are simply just notes if we do not do anything about it. Therefore, in order to execute properly and consistently on the charts, you must formulate a trade plan based on the notes. So this is how I formulated a trade plan for everybody using those notes. This is a high-level trade plan, and you guys can for sure just copy and paste this trade plan if you want to, or develop your own based on the notes, right? So let's walk through this trade plan. Excuse me. And by the way, this is intraday only. This is not swing trading. This is an intraday trade plan for day trading, right? So intraday, we're bullish. Therefore, I want to buy dips today. The most significant structure on the chart remains at 67.4150 through 67.54, with 67.4725, Tuesday's low being a pivot as well. Because all-time high 6,800 has not been truly expanded upon yet, this zone will remain the bottom of the bull box, in which intraday buyers must defend or be liquidated into macro levels. I can remain vigilant at this zone and apply the entry models in case price action gets here today, especially watching selling exhaustion. I'm not fond of shorting today unless I am using a hedge type setup similar to Tuesday. Other than that, 67.6650 through 67.72 is a great zone at yesterday's low to use as a false breakdown pivot. Yesterday's low is a significant intraday low of interest, but if it is to fail, I am not giving up on the 67.4150 through 67.54 zone below. If price is to hold above immediate and aggressive supports, I will not feel FOMO and allow price to print new all-time highs, awaiting new structure and the next pullback. The best zones on the chart aligning with the bias, with our bullish bias, and the failure of these levels will change the bias of the chart, therefore it has the highest probability for a reaction, is 67.6650 through 67.72 and 67.4150 through 67.54. Level to level, zone to zone approach, manage risk accordingly. So now let's go into the charts and let's discuss everything that happened. First of all, if you're looking for a hedge, or even if you're just looking to short, there's a valid opportunity to short today. And that's purely based on the watch list edge. That's why in my notes, I always make sure to make sure folks remember that always keep an eye on your watch list, because your watch list is giving you a story, right? Today we opened Apple, Microsoft, Amazon, Google, Tesla, Meta. All of these stocks were red at the open, and they remained red until the afternoon with when Google and Meta ended up catching themselves. But Apple and Microsoft and Google and Tesla, these guys are still red. So off of the open, if we're saying to ourselves, if the market is going to expand above all-time high, then logically the market should not be red. We should not be seeing excessive weakness. That could lead to a false breakout of all-time high. And then when you see that 6,800, let me zoom in here so you guys can see this. When you see that price action is wicking off of 6,800 and 6,800, the previous all-time high has now become resistance. That tells you everything that you need to know if you want to hedge or if you simply want to short the false breakout of all-time high. Even if you missed the 6,800 short, the breakdown of the overnight low or the breakdown of 67.8750, they both offered valid short opportunities. What you're doing here is you're shorting the failure of these supports, and we're using the watch list as an edge to showcase that the market is indeed weak and we do not have excessive strength to print new all-time highs. After that, however, the trade plan comes into play. And the trade plan for today, because we were bullish, we needed to see this pullback. So you don't have to short, right? You don't have to short. We're not bearish into the open unless you want to hedge and you want to hedge your portfolio. But we do want to long at the significant areas of support. 67, 66.50 through 67.72. That was our first extremely quality area of interest on the intraday time frame. 67.41.50 through 67.54 did not get contested. So you're asking me, Derry, why is 67, 66.50 through 67.72 a very important spot of support? And the only way to understand that is by zooming out and looking at the market structures in play, right? So we have Monday's low housed around 67.60s. We now have Wednesday's low at 67.60s. So we have two daily lows here, but the structure of these daily lows as it relates to the emotion of market participants matters more, because the two lows at Monday's low and Wednesday's low is a clean breakout above resistances into all-time high. And not only is it a clean breakout into all-time high, it's a clean breakout attempt above such all-time high as well. So we broke out the pre-market resistance right here and the overnight resistance right here into 6,800 all-time high, but price did not stop there and we attempted to break out even higher. So if you guys are a buyer and you have your stop loss at the prior day's low, and I guarantee there's a lot of stop losses at the prior day's low, and you're a seller, the market is weak, we ended up fading all-time high, that's your first area to hunt some stops and hunt a target in which could lead to selling exhaustion. So essentially what we're saying to ourselves today is the fact that price action is attempting to break out 6,800, the previous all-time high. If price action is to break down the start of where we began the possible breakouts above 6,800, then that's going to trap way too many bulls. That gives us a valid opportunity to look for a long against the sentiments, which is overly bearish in a bullish environment. And that gives us an opportunity to long against trapped sellers that are chasing a breakdown down here into significant support. We must see demand at 67, 66.50 through 67.72, or the entire structure is going to come collapsing down into the bottom of the bull box, in which that's the last thing you really want to see if you're a buyer, right? Because we already defended the bottom of the bull box on Tuesday, right? So the higher lows here are significant. So how do you execute now? So that's the main parameters behind what we're doing based on an analysis perspective. And the analysis is important because a lot of the time we will deal with psychological hurdles. And the only reason why we may feel hesitant at going long in these areas, or we might second guess ourselves, is because we simply don't understand the contextual significance of the areas that we're buying or selling. right? Monday's low is absurdly important to the intraday time frame. All-time high is extremely important to the intraday time frame. Everything else is noise. I only want to execute somewhere where the most significant amount of market participants are housed. I simply want to align with the big boys of this intraday time frame, right? Obviously, there's much better supports the lower that we go into the macro perspective. So execution today, let's jump into the Discord and talk about it. 67.66 through 67.72, this got activated at 10:45 a.m. So if you're using a predetermined entry model, which is literally just buy the level straight up, you're not waiting for the false breakdown. And by the way, this predetermined entry model is only really good on first test of the support and resistances. Obviously, this is fresh support made yesterday, and we're testing it for the first time at 10:45 a.m. So that's your best AOK sign to look for a buy blindly predetermined entry model. So I know a lot of people actually did this in the Discord. 67.72 long, your stop loss behind the prior day's low. You're looking for a reaction on first test off of 67.72, right around this pre-market overnight high breakout area from yesterday. And your first targets in this case has to be somewhere right around 67.8750, because we talked about the significance of 67.8750 in the pre-market. If it is to fail, if this support is to fail, and you can see that bulls really try to hold it at 10 a.m. If it fails, it flips into resistance, right? That's technical analysis 101. So if you're long 67.72, stop loss behind the low of the day, you take your target, let's say 2 points below 67.8750. That's a solid 1.6 R trade. Absolutely solid. You can walk away for the rest of the day and be completely satisfied. But that's not all that we got from 67.6650 through 67.72. We also got a false breakdown of the prior day's low. This false breakdown, the methodology and the execution, you can either apply the Fibonacci trap, or you can simply do a traditional false breakdown entry model, which is simply just enter into the trade via a market order. And I'm going to quickly bring over this spreadsheet that I have, this document that I have, talking about those entry models. So as you can see, the Fibonacci trap is very simple, right? You have volatility, price action below the level. You have recovery above the level, you have the higher low, and then we take off back into resistances. Did that happen for 57.6650? Yes, it did. So we started down here, right? That's the prior day's low. Let me get rid of this. The prior day's low, we ended up undercutting it, right? And you can see price action here is simply chilling out right below the prior day's low right here. And because we undercut the prior day's low, but we did not continue the breakdown of the prior day's low, we ended up printing the Fibonacci trap, which looks like this. You have a recovery above the low. You have a pullback into that low, literally almost exactly the level, right around 2:45 p.m. and 2 p.m. And then you have a continuation back to the upside. In this case, we ended up touching the VWAP, which was a decent spot to take a target. So this is how the Fibonacci trap looks in real time. It's absolutely stunning, beautiful, 10 out of 10. It looks like this with our guide in this document that I have that I'm also posting on the Substack. Stay tuned. We'll talk about the Substack, and it played out picture perfectly in real time, right? Now let's continue in the Discord. So we're watching for a false breakdown of yesterday's low. Apply the entry models below here. We would love to see the false breakdown of Tuesday's low, 67.4725, right? And in this situation, when we do not get the false breakdown at 10:45 a.m., right? This is how price action reacted at 67.72. I alerted the Discord members and I said, those for us that were waiting to trade the false breakdown of yesterday's low do not have FOMO. Let's see if we can get that trade later. So as you can see, I posted this at 11:02 a.m., right? In the Discord. 11:02 a.m., October 9th. Let's be patient. And let's see if the false breakdown gets printed later on in the day. And would you look at that? At 1:05 p.m., our patience prevailed. We had no FOMO. For those of us that are waiting for the false breakdown, 67.6450 is active long. Apply the false breakdown entry models. Make sure we apply the false breakdown entry model. Ideally, 67.72 recovers. Be patient and give it space. So the reason why I'm telling everybody to be patient, to give it space, is because volatility and volume is relatively low today. We do not have to be extremely aggressive. Give price action some time to play out. Give price action some time to confirm the false breakdown entry model, and then we can go ahead and execute. Right? And as you can see, we ended up rejecting 67.72 and we made a new low. So after a few minutes of waiting, we ended up waiting about 15-20 minutes. We got this beautiful 15-minute outside bar to reverse back up into the range. But more importantly, you'll notice here that sellers are unable to continue the breakdown that they started in the morning. If price action is truly to be weak today, then price action should not be hanging out below significant supports. It just shouldn't. It should continue lower and lower because we know that sellers take the elevator trip down the range. So if buyers are now stepping in off of selling exhaustion, if sellers are about to be trapped, price action is giving you indication if that is to be the case, yes or no. And the fact that we're chopping out below the lows and then we get this 15-minute inside bar reversing back up into 67.72, I said to myself, that's all the confirmation I need. It looks good. We're chopping out below the low. Let's see if we can take this false breakdown. Anybody that wants to try it, it is applicable now. And if you're waiting for the Fibonacci trap, it got printed right around here. Right, we ended up getting pulled back for the higher low around 2 p.m. and we continue to chop it out. This chop is exactly what you want to see. This is why futures is king. Chop is sometimes your best friend. And then right before the close for the power hour session, 3 p.m. to 4 p.m., we ended up testing VWAP, which was a great area to take a target. And that's exactly what I called out in the Fibonacci bots in the Discord, right? SPY VIP first target hit, 67.82. Take it level to level. As a day trader, it's very important to manage your risk level to level, zone to zone, because your stop loss is so tight, you can get poked out very easily. So if we draw the position tool here off of the Fibonacci trap, stop loss is behind the low. Then the VWAP is about a little bit more than 2R return, 2.5R return. Even if you had a wider stop loss, let's say you did a 7-point stop loss, you're still getting about 2R off of this false breakdown Fibonacci trap into VWAP first targets. That's pretty much all for today, guys. I'm keeping it simple. I'm keeping it very focused, and understanding your trade plan is what's going to take you to the next level. If you have a trade plan, you're already beating 99% of retail traders. 99% of retail traders do not have a trade plan. And even if they do have a trade plan, it's not even close to the quality of this trade plan that I have presented in my notes. This is a 10 out of 10 technical analysis from a contextual perspective of who's trapped and who's in control. I remember the very first thing that I said in this live stream: if you want to be profitable, you have to take somebody else's money. The book that we're reading, he calls it a doggy eats dog world, a doggy dog world. That's exactly what the stock market is. You have to be a winner. We're trading like it's a professional sport. If you want to score, you have to beat your opponents. If you want to make money, you got to take somebody else's lunch money. That's just the harsh truth of the game that we play, and that's just the reality. The game doesn't have any room for lightheartedness, right? You have to be aggressive, you have to know your trade plan, and you have to execute without hesitation. If there's 5 seconds left on the game time clock and you have to shoot that 3 to win the game, you're not hesitating. You're shooting that 3 and you're trying your absolute best to win. Just like trading, we have to do our absolute best. And that's why the process takes precedence. That's why the process is so key for execution, because if you did not have this zone planned out in the pre-markets, it's going to be very difficult to go long when the charts looks bearish. But if you're smart, the best traders are always longing when the chart is bearish, unless we're obviously crashing like back in April, which is the most rare times in the markets. If you guys have any questions, comments, concerns, you can let me know. We're going to go ahead and jump into the Substack right now. Let me go ahead and bring it over to the main screen. So this is the Substack that's going to be sent out at 7 p.m. later today. We'll talk about the options premiums because we are going to be harvesting some premiums tomorrow at the close. So if you're somebody that likes to collect premium, if you want to sell puts instead of just doing straight up futures or naked options, then you can do that if you want to, right? The Fibonacci trap, and they work for any instrument that you want to trade. At the end of the day, it's just a setup, and you can execute that setup with any instrument you'd like to, whether it's options, selling puts, futures, even SPY shares if you want to, if you have that cash in your accounts. So the premiums that are being harvested for MES, we only have one trading day left, 65.20, 64.70, 65.50. That's the chart right here that we're all going to collect the premiums. We have a 99% chance to collect these premiums tomorrow because there's a 99% chance that the market is not going to crash tomorrow, right? There's like a less than 1% chance that the market crashes purely based on historical 200-year data, right? Statistics. Other than that, guys, thank you so much for tuning in. Let's go ahead and wrap it up. If you have any questions, comments, concerns, you can let me know. Today is one of those sessions that the trade plan and the notes in the pre-market takes the spotlight. It takes the spotlight because I can't even tell you how many times in my trading career where I would see all this red and I would be so overly bullish, or excuse me, overly bearish, and I would ignore, zooming out, I would ignore the fact that we're still bullish from a structural and intraday time frame perspective, and I would miss out easy setups like the false breakdown of the prior day's low. In my opinion, guys, that's an easy setup, and in my opinion, it's an easy place to risk your points because we're trading against the trapped sellers. We can make money off of them, and we're also taking advantage of an A+ high quality setup, which is a false breakdown plus Fibonacci trap, right? So you can literally turn your brain off. You can turn your brain off and execute these setups in real time. There's no need to feel emotional, right? There's absolutely no need to feel emotional because you have a blueprint. You have a plan. You just follow that plan. It doesn't matter if it works. It doesn't matter if it fails. That's for your journal after hours. But in real time, when you're executing this edge, you understand that you're putting yourself already in a successful position. The chart does the position doesn't even have to be green, and you know that you're in a plausible, successful position because you're playing for good probability, you're playing against the sentiments, and you're playing for trapped traders. Thank you guys so much for listening. The Discord today was really awesome. I had a lot of fun with everybody in the Discord today with the live commentary. I'm just super, super, super excited to continue doing what I'm doing. And I just really hope that it could reach a larger audience because I really believe what I'm doing will set you up for success. It doesn't matter what time frame you're on. You can be a day trader, a swing trader, an investor. Understand how to read the charts from a contextual perspective. It's going to make this game a joke because you're not going to have the psychological boundaries and hurdles that everybody else has. If you can flow with price action like water in a river, you'll become water. You become emotionless. You'll become adaptable, and you can adapt your mindset, your system, your edge to whatever the market is doing. It's not our job to tell the market what it wants to do. Our job is to simply align with whatever it's doing, and we want to kill the people that have an opinion. We have to take their money, and we have to align with the trend, and we have to align with the good setups. That's just the harsh reality of what we do. So I see you guys in the chat. Thank you so much for tuning in. Tomorrow we're going to finish the book. Today we won't be finishing the book. I want to keep it for Friday because Friday, people, it's Friday. We're heading into the weekend. We'll have some fun with the book club. If you guys need anything, Tradingwarz.com. And if you guys need the Discord for the live commentary, you can check out Tradingwarz.com. All of the links, everything is in there. Please do not get scammed. There's a lot of people copying what we do because they can't do what we do. So they have to copy what we do. Unfortunately, that's the way it is. So it's up to you guys and it's up to us, Rich and I, to make sure you guys are safe out there and you're not getting scammed by those imposters, right? And the Substack is going to be posted at 7 p.m. I also have a closing announcement before I close up the stream. All of my notes every single thing that I write about, all of the levels, all of the external and internal context, all of the notes, the trade plans, the macro time frame levels, the trade plan for the macro time frame, everything is going to become completely free for every single person in the world. The only thing that's going to be premium for my members is what you see right here, the live commentary. And you can see right here the bots being activated. We know 67, 66, 72 activated, 10:45 a.m. And you're getting all of my support basically, right? I said to everybody in the Discord today, just be a little bit patient. When the bot called out 67, 64, 50 is active, that's the prior day's low. I said, be a little patient today, guys. Give it some space. Be a little bit patient. And then when we got some more confirmation of a false breakdown, that was an A-OK sign to go ahead and take the trade. And we ended up hitting the first VWAP target, which is really all you need, right? As a day trader, you just want to see that beautiful reaction. Literally hear your voice when I'm watching price action. That's really good to hear. Thank you so much. That's really awesome to me. It took me a long time to figure out the best way to really understand how to trade is to just surrender your ego to the charts. Surrender your ego to the charts. You cannot develop a system, you cannot develop an edge that is not following along with price action and the charts. It's simply not possible, because if you're not following along with the charts, if you're not following along with the market structures dictating the charts, then you're simply gambling what you think. And that's not what professional traders do. Not a single trade that we take is low probability. We want to take advantage of the good setups and the trapped traders. Thank you guys so much for listening. Today has been a prime example of my edge in my system. And I'm just happy that we were able to catch everything in real time and in the Discord. Tradingwarz.com if you need me. And I will see you next time. Enjoy the rest of your day. We'll be back again bright and early tomorrow morning, copying and pasting the exact same thing that we did today, right? Just rinse and repeat, rinse and repeat, rinse and repeat. Eventually, the market environment will change, and we'll change with it. Enjoy the rest of your day. I'll see you next time.